What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic, and today we're going to be looking at some of the charts. We're going to look at Tesla, we're going to look at SPY, we're going to look at QQQ, and we're going to look at everybody's favorite NVDA. Before we get going, don't forget to check out the links in the description below. There's a 50% off first month's upgrade on the Rawstocks Discord. You can join the Discord for free. Visit wap.com/Rawstocks. Take advantage of that 50% off sale. Makes that first month only $12.50. And we basically guarantee that you will make that $12.50 back in your first 30 days and hopefully more. Also, a link to Top Step where you can try a futures funded trading combine. Only $49 for a 50K account. So check that out if you're interested in attempting to become a futures funded trader, or if you want more information, drop into the Discord. We're happy to answer questions. So let's jump into the chart. Right up now, we got Tesla daily chart pulled up. And a couple things we want to notice is that we have a daily fair value gap, although it's small. We've dropped down to test that with a wick today. Okay, we rallied off of that point. We set a new low. We seem to be consolidating and holding this range a little bit. Below, we got an order block that sits at 160 down to 152, 153. And it looks like we will draw into that order block at some point in time in the near future. Now, are we going to drop down into it first, or are we going to rally up and then drop down into it? What I suspect is going to happen is that we're going to see price start to find some support, pop up into this daily bearish fair value gap into the 190 area. And then I think we're going to come down and attack that order block where I think we're going to find support. And then we're going to start our way potentially back up. Now, whether that's just a shallow run again that's going to drop us down even further, there's some additional sell side targets beyond this order block that we could hit. Or we might find the support, start to rally up maybe after earnings or around earnings, right? And we could push back up above this high of 205 and then rally towards some of those buy side targets. So we are going to be watching that very closely. I got a target here, right, which would be the consequent encroachment of this daily fair value gap at 192. That's what I'm looking for. A push back up, take out these equal highs, rally into the consequent encroachment. There's a trend line developing here from top back in December 28th to the recent top of February 29th. And we might rally up into that, find resistance. Again, there's a fair value gap there. Drop down, take a new low, drop down into the order block, and then see if that wants to support price to make a move higher or not. If we also drop down into a lower time frame chart, we can see we had a very aggressive sell-off upon open. Although the rest of the market seemed to do all right. Tesla sold down, set that new low. V-shaped recovery. So it wasn't much indication that there was a good trade setup, at least on the 5-minute chart, until you start to see that there is a 5-minute fair value gap inversion here. And you can, the way you trade those inversions is 5-minute candle close. Outside of the inversion, you can either wait for price to draw back down into it, or you can take the entry there and start to target, in this case, buy side liquidity, right? And we have this swing order block, or we had some fair value gaps along the way. That inverted fair value gap held. We saw price run up, right? And eventually into the order block, not getting back up to the original high during pre-market. But nice recovery there if you were to have caught the bottom or somewhere near the bottom. And again, if you were watching the high time frame chart, you know it was delivery down to a high time frame fair value gap that ended up finding the support there. And so, be using those high time frames as well as your low time frames to know where your potential targets are. Let's jump over into SPY. On SPY, we got the same thing that we've been talking about all week. Right, we talked about the potential of a weekly low coming in yesterday. Sure enough, although the CPI report wasn't great, we still found us rallying, right? Because we're in that melt up situation. Our eventual target is 534.22. And that's a 200% fib extension. And I think we're just going to walk this line. We might pop down below it just a little bit, try to bait some bears, thinking this thing's going to fall apart. But I think we're going to see over the next month, maybe a little bit further, but I think over the next month, we're going to see this probably culminate around earnings season. Where we might see price start to unravel a little bit. And where will we target if price starts to unravel? If we're looking to go short, we can start looking at sell side liquidity, and there's all kinds of sell side liquidity on the way down. So these little drops, each one of these is a sell side target. We'll take that one off because it's right around that 1 fib level on the way back down, but we got lots and lots of targets, right? So we can just start to short it and start to look at some of these targets on the way down. Maybe we find a bounce and we head higher. But once we get to that 234.22, unless we get major daily displacement, which I don't think we will, but if we do get major daily displacement through there, leaving a nice big breakout candle, I'm going to be looking to short 534.22. Okay. If we jump down into a lower time frame, we can take a look at some of the live call out trades that we did in the Discord today. We were hitting them like crazy, couple 100% call outs, some really nice trades in there. These are all called out in the premium section of the Discord for that low price of $25 for a membership with the 50% off for the first month. And we well over made it back today, making, probably about, $600 in call outs if you traded exactly how I did. So first trade we got, right? We saw that Judas swing out of the gate during the data drop, right? So we dropped down. We end up popping back up. So it's called a Judas swing where it's a fake out move, right? And then we rallied back down, but we didn't set a new low. Okay. Then what I'm watching for here is we get this 5-minute fair value gap inversion, right? So that candle closes, we pop back down, we take the trade. This isn't a super clear indication. The trade was actually taken, I think, up around here. And then what we're targeting is the previous high, and I was actually targeting the order block low, something around there today. So we exited a little bit early, but we still got 100% trade on that one. Watched for price to top. We did not get back up. This white line here in the blue order block is consequent encroachment. We failed to deliver to consequent encroachment, so we took a short entry, right? And this was near the exact short entry that we took. Saw price pop up with a wick, steal the stops from this move down, and then start to fade it, right? Our target was the breaker block that happened from back on Friday. So that was in this previous high over here. So that became a breaker block when we broke through it. So on the short, I was targeting the breaker block for the return to. Now there's also a fair value gap right inside that breaker block. So either of those would have been great targets to take. And sure enough, we take that short. We hit our target. Another nice trade in there. Okay. Then we see price popping back up. There's a fair value gap in here. I saw price deliver this low, come back and failed to deliver a new low. Took this candle up, entered the trade there with the stop loss being back at the previous low. So that failed to deliver and take a new low, showed me there was signs of weakness on the bear case scenario because we did not take the new low, immediately followed by a bullish engulfing candle. Entered the trade, targeting the old high, trade hit target plus a little bit near the end. Was looking to get back in up here for a run to 218. Never ended up taking a trade on SPY near the end of the day. Did grab a little work on my futures combine in this run up and got about $130 profit off of some micro contracts there. If we take a look at QQQ, same kind of deal, but let's go back to SPY. SPY closed above Friday's candle high, right? Or Friday's candle open, not the high, but the open. That's a good sign. If you look at the Qs are a little bit weaker. Could not get back up to the opening price of Friday's candle. So we are seeing a little bit of weakness on Qs. We're looking for Qs to push up and set that new high. Same with SPY. We're looking for SPY to go up and take that previous high tomorrow. And then we'll see if Thursday offers a reversal scenario or a continuation. But I think that SPY is the stronger asset to be trading right now over the Qs. And then if we jump over to NVDA, we talked about the target yesterday of coming back up to the 900 range, right? As we saw this drop down, looking for that pop back up. Also looking to, if you want a low risk short entry, and by low risk, take that with a grain of salt because this is NVIDIA we're talking about, and we're still talking about a $30 move on the low risk entry. But we're going to look at entering in the optimal trade entry to go short And I know like going short on NVIDIA right now is definitely a gamble, but this is the trade setup. Okay, looking to go short in the optimal trade entry, looking to target the previous low, and then you got fib levels on the way down, right? Our previous low, actually that fib is not drawn out correctly. There we go. So we're already up near optimal trade entry, right? So we could go a little bit deeper. Let's readjust that. There we go. And so if you were to just target the previous low, we're at a 2-to-1 risk-reward ratio, and that's at 842.84 on the short. Next target down would be 807.33. Next target down from there would be 761. Symmetrical swing would be 711.33, and a longer term full take profit would be 579.82. Now, I don't think that's going to play out anytime soon, but I do think we could see this push back down and take a new low. There are definitely some gaps and fair value gaps in here, and then we even have the bigger gap. But if you're looking at the short here for the bigger play, you're looking at least like 6 months out contracts or even longer is what I'd be looking at. If you're looking at a short-term play, just back to 842, right? Taking your entry up here around 935. 924 to 935, even if we go a little bit deeper. Now, if we close a daily candle above Friday's opening price, which opening price was 951.38, not sure where NVIDIA ended. I know it was kind of rallying at the end of the day, but if we close above, daily candle close above 951.38, trade is dead, and I'd be looking for bullish a call or a bullish trade to take a new high. Okay, and then we'd be looking at $1,000 calls out of the money for maybe 2 weeks out or something like that. Not sure if it'll happen this week, but could happen in 2 weeks. So that's my analysis for you guys today. Hopefully it's been helpful. Love bringing you guys the content. YouTube's growing, Discord's growing. Don't forget to smash a like, subscribe, share with all your friends. Appreciate it, all the support, and we'll see you guys on the next one.